Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, since posting a bullish hammer that supported a further test to the upside, the market got in a little bit of a difficulty when it comes to that level 67.35.45 for the Australian dollar, and from there has rejected and back to the bottom side of the range, which is seen at 66.80. This time around there is no demand, and quite surprisingly the fact is that we could see further pressure on the downside as the bullish divergence is somewhat weakened. A break of 66.80 would give further scope towards 66.30 with a potential target around 64.80.90. Behind this move was the fact that the dollar index, which measures the greenback strength against a basket of 6 major currencies, rallied from 109.32 to close in New York at 109.90. Looking ahead, the two-day US Federal Reserve meeting comes to a conclusion on Wednesday, or Sydney time at 4 a.m, and it is widely expected to see a 75 base point rate hike. With the US inflation not cooling as quickly as hoped, the US central bank is likely to outline its hawkish policy stance as investors look for any dovish overturns. When the US Chairman, Federal Reserve, Jerome Powell, takes question and answers in his press conference 30 minutes later after the announcement. So no doubt we're heading for a further whipsaw price action, and keep an eye on this base at 66.80. There is still a chance we could see a rejection from there, given that the fact that the divergence is also with the MACD, and therefore could see a rebound back to that 67.35.45. The dollar index has posted an engulfing candle and now negating this hammer that was posted, and therefore with the outside range day does put a little bit of bearishness back to the market and look towards initial support at 99.55, and with the base still respected at 98.80. In light of the pattern, as long as we don't break beneath here, then all the pressure should return back to the top side and see a challenge to that downtrend. If the bullish pattern does fail, and then we see a break of 98.80, then that would give us further weakness towards 96.40.80 as a potential target. The dollar yen is attempting to recover, even though the technicals are somewhat heavy, and the MACD is still now heading for a weak negative signal. In light of a pattern though, the market is still pressuring this top side resistance around 143.80, but as we get closer to that top side around 145, it's still seen as a risk that the Bank of Japan could intervene after checking last week on the rates of the currency. Nevertheless, with the weak technicals, we may see another down test eventually and move away from this top side and take out the support level of 142.75, which would give further scope to 141. Sterling, well, the market's still attempting to test lower after the close to the hammer or dragonfly doji failed to eventuate to support a rally, and therefore the market is still overall looking towards that bottom side call of 111 to 113. As we're at 113 at the moment, the market could still look towards 113.20 to 111.40.55. The market retreated again for the third time from 1,678.82 and now looking back towards the bottom side of the range, which is somewhere around 1,654, with the objective still at this present called due to the lack of demand and also no break or close of New York above 82. That is at 1,635 to 42 as the initial target. The trend is still there, so therefore it does give further pressure to the downside at this present stage, along with the dollar rebounding. The oil outlook, well, this dragonfly doji also didn't come through, and the market is backed away from that resistant area, which was somewhere around 86.55.65 as a key point. That was a call if it broke, looking to 88, but now with a weak candle coming through, could see another down challenge back to this 81.45 and reassess from there. Well, that wraps it for the morning. Thank you very much for joining me. As always, look out for the intraday report. I hope you enjoyed a great start to the day.